All right, all you devils out there, happy Friday. Sam here with you. Let's see, it's coming at 1 o'clock here now on Friday the 4th of March. Here, so of course we're going to get an update on Bitcoin. Now, here we are back at welcome back, my friends, to the count that never ends. We just continue to stay in this range. Now, of course, this is daily, and we're looking at the big picture here. But as it is, we are just right now, we're just kind of stuck in a range. Nothing has happened enough to where we would need to invalidate the idea of the triangle, although, well, we dig in there. So the idea here that we might have an A, B, and we're going to get an impulse of 3 is currently hanging by a thread. If we were going to get an impulse here, we wouldn't want to see that one overlap. In fact, I have a small position of that here. We'll look at in a minute. It's about to get stopped out. But if we're going to do this here, is the idea being here, we want to do, if it's going to hold as a triangle, if it's going to hold, we want to do this in a series of 3s. So last week, as we debated whether or not this could be a legit 3, well, there's a couple of different ways we could still get up here, right? As long as we maintain, could be W, X, Y. There's a couple of different ways we could get here, as long as we maintain the structure of basically. Oh, here, at least at the largest degree, we do it in the context of a 3 to give us that triangle pattern, right? We shall see. I don't know that there's anything particularly definitive about the price action here, other than it looks like we're about to kill the potential for this to have been an impulse. Look, yeah, it's gonna be very close here. I may be stopped out here while I'm recording this here. So this we hold here. Now, of course, if we come a little bit lower here and we start to threaten the upsloping triangle here, we could quickly. Let's see if I. Oh, here we'll just do it this way. We go back to the idea of potentially a flat here. So we'd be looking for the 4 down here. Oh, what are we in the low 30s? So we'd ultimately something along these lines here. Now, as to how we'd count that. If it's going to be A, B, and we're going to hold as a C to get our 4 here, we'd be looking to get this into a 5. This is going to be kind of, this is 1, 2, 3, and we're in the process here. Now we'll see, right? We haven't broken that. If we could maybe finish it as a diag. There's a couple of different things that could happen here. So right now, it's a bit of a hurry up and wait, right? Certainly plenty of volatility in the background and creating lots of uncertainty. So while it was encouraging here in the early parts of this week, where we had a decoupling from Bitcoin to Bitcoin and the Nasdaq, right, or high tech or high risk, whatever you want to call it, risk on, it didn't last. So we can't really declare the lack of correlation here clearly, right? It's being reflected again today. So a lot of hurry up and wait in here to get a sense of direction. We'll look at that in a little more detail here, but I don't think we need to abandon here yet. And of course, even the triangle, we could come down here as long as this maintains the structure of 3s. Now, looking at it here, oh, come here, right? If this were going to be a 3, it's going to be hard to see how we're going to finish this here if the triangle were to come down here. It's getting tougher and tougher to put that together. So back to where we were here, for the triangle to hold this trend line here, I would think would be significant here to that pattern. Now, it doesn't have to be a triangle, right? I mean, this could resolve a number of different ways, including taking it down much lower. So let's not lock into entirely, right? You want to have a primary, secondary. In this case, you could have 2, 3, 4 different counts. I've seen valid counts all over the place. So there are plenty of different ways this can resolve. But right now, we're just stuck, right? We can't really qualify anything other than we're in a range. Let's stick with Elliott here, and then I'm going to do just a little, this will probably be a short one here, just a little swing structure, just to clarify a few things and maybe review a thing, maybe some things that you guys you don't qualify swing structure with this, which it's so rudimentary, but I think sometimes people forget about here, so we'll touch on that a little bit. Oh, let's see here. This is the trade that I put on and posted it in the members Discord here for people to see. Now it literally is about to get stopped out here. So the idea in the trade was that if this was going to be the 2, if we had done a 3 here, it looked like we were going to go into a combo here. This is where I got interested, because at that point right here we had some interesting confluence. So we had the Vegas wave was right there. Then we had the length of the 2, from the 1 to the 2 projected from the proposed 3. We had parity here, so you had this confluence. We had the 38 that you see here in gray. We had the Vegas wave, and then we had that parity between 2 and 4. Right, it ends up right. So you could take the trade with that entry, which is where I entered, and it was very clear where you're going to put the stop, right? One tick below the pivot of the 1, right? So you can see here, this is the stop, right? It looks like it's about to get stopped out now. Didn't put on a lot of size, no leverage, but just nibbled here for the idea that we could have finished with an ABC or a WXY. I think this would have been ABC, right? So, something along those lines here. But here we're just continuing to drift lower, and all it takes is 1 tick, right? 1 tick below, and then not only will that get stopped out, but we will invalidate. Already it doesn't look right? I mean, this is the 3 and this is the 4. We're getting too far away, right? So it had all the ingredients, right? This was kind of the last stand, really, right? Which is why I didn't go very, very heavy here. Maybe you could have played with that, right? So you would have had. This might have looked better here if I do it completely, right? That had potential to play a little bit better. At this, once we started to drift here and got under the 233, this trade really this is now. I've done it before, right? Where you just say, oh fuck it, right? And you just bail and you take the loser. And then I've seen it within ticks turn around. So I tend to just let it go, right? If it's going to, again, this is just not going to, be a weekend killer, right? But, a stop's a stop, right? Nobody likes it, right? So, but if this gets stopped out, then we reevaluate. This count, I think, dies here as to whether or not, it certainly dies as an impulse. Now we have to reconsider as to what else it might be. Right, because we can look at this pretty clearly as a 3. Well, let's just say it this way, right? So it's a 3. Here. This is an impulse. This is correcting it. I suppose the wild card in here for a bull would be 1, 2, 1, 2, right? Because I've got an impulse here. Deep correction. All right, so all the more why. Okay, right. So I mean, here, let's just get that out of there. All right, so we'll know here when this gets tagged. It wouldn't make as much sense if this were 1, 2, and then we went again 1, 2. Well, now we're starting to project to levels that it would start to. Well, if we come back to our where is it? Here. If we come back to this, right? So if this is 1, 2, 1, 2, it's going to start setting up the idea that if this is the 1, 2, and then we've gone 1, 2, 3, 4, 5 before we come back down for that 2, it's just we're going to start to push too far beyond this, which then you'd be back here going, shit, how am I gonna finish this? I suppose you'd end up right here, right? I suppose you'd end up here. You'd have to rework this as a WXY, and then you'd have to go 1, 2, 1, 2, right? And the implication would be triangles off the board. It's going to be an ABC, right? As a WXY, 4 is in, and it's 1, 2, 1, 2, and we're off we go. That's on the assumption, right? The first assumption here is that is going to hold as our 3. A lot of good Elliotticians do not think that's the 3. They think that's a 1. Well, we shall see, right? And many others think it goes 3, 4, right, and then we completed 5, because you can work a 5 in here, right? Now, that's my least. That's the one that I think is least likely. Right? I think we're either playing 1 and we're searching for a 2, or the 4 is going to hold here, and up we go. Right? So all of that remains to be seen here. Right now, it's just a bit of a holding pattern. So let's just review that as to why I say that. Why do I say that? Oh shit! Now I gotta find it. Okay, so let's. Here I just whipped this up here for this video here, since there's not a lot to talk about in the Elliott context. But this actually plays into how you would interpret it, where swing structure and Elliott can meet. Sometimes it's ideally suited to it. Other times it's it's not there, right? And by that I mean sometimes the Elliott is just so elusive. It's not helpful, right? As you often hear me say, if it's not helping, get it off the chart. But what I want to do here is just get clarity on how we're defining swing structure. And now this is, that I'm borrowing a little bit from our friends in the Forex markets. This is predominantly how they approach it. And it's so much of the FX traders, they've had to adapt to the fact that they do not have centralized exchanges, so they can't get volume. So sure, they can get tick volume, but they can't get the actual volume because it's not centralized. So as a result of that, FX traders have had to be very creative about how they interpret swing structure, price action, and then dealing with the fact that you've got a handful, 6, 7, 8, 9, 10, maybe of the major institution and banks that are moving money around all the time. So when they enter and exit the market, right, they leave footprints. Now, of course, they try not to, but it's tough for them. But they have to be strategic about what they enter. But I digress here. But point being here, let's just talk about swing structure just for a second, right? So I'm just, it almost doesn't matter here. I'm just going to use the last swing low here. So one of the things that you hear me say a lot, right, and I say this whether it's training or live streams or here, is that there's only one thing the market can actually do, right? I mean, this seems so simplistic, but let's just bear with me. We can swing, okay? Now, that's it, right? So only one of two things can happen. Once we have a swing and we start to come back from it, only one of two things can happen. Either we're going to retrace internally and take out the high, or we're going to just continue lower and take out the low. And it's certainly possible, right? Context is everything. That's just the same thing happening in the opposite direction, right? So swing, retrace. Now, when it's coming down, do you know, right? You don't know here. Are you going to do this, right? We can do that, right? So we talk about that all. I reference that all the time because I make some assumptions here about swing structure here and understanding swing structure that let's clarify. Okay, so when we're here, how do we qualify these as actually higher highs and higher lows? Now we look at here, and I've just put a little zigzag indicator on this just to help clarify, and then I've just added the arrows. So these would be good highs, good lows here. So from this low here, as it pushes up, we get a new high, right? So here's the last high, here's the low, we get a new high. Now we retrace. So here's that exact same schematic that I'm just drawing right here. We retrace. Now you don't know if it's doing this or doing this. So how do we know, how do we qualify this as, in effect here, as a higher low? Well, we can't actually call it a higher low, but back to this, how do we know that's a low, not going here? How do we know? How do we qualify it? How do we put it in context? Well, we can't qualify it until one of those two sides breaks. Once, in this case, if the pivot here breaks, well, then I know I have a good low because it created a new high. Now, take that, right, and let's just apply it here. So I swing, I get a low. So here's the internal retracement that goes external. How do I know this is a good low? Because it gave me a new high. Right, so you say, oh, here, it's higher high, higher low, higher high, higher low. Right, very, very simple. But how do we determine the qualifications as to when the swing structure changes? Lower low gives us a higher high. This low gives us a new high. We get another lower high, right? How do I know that it's a good low? Because it gives me a new high. I mean, you could think of it this way. The low's purpose here, if it's going to hold its purpose as giving us that low, its job is to create a new high. So where do things change, right? So here, this is a good low because it gives me a new high. Well, a couple things happen here. Well, number one, the first thing that happens here, and again, bear with me if this is just ridiculously rudimentary, but the first thing that happens here is that I get a break of structure because this low gives me a new high, but as it's retracing here, I would not put this down as another low here. Oh, shit, what do I want here? Well, let's see, I want red here. I wouldn't do it. Let me do it this way so I stay color consistent here. So this is a low, but it's different than this low because it did not give me a new high. Remember, our qualification to call this a good low in the context of higher highs, higher lows is that it has to give me a new high. Well, this low here, not so good, right? Doesn't give me a lower high. It doesn't give me a new high. For that to be a good low, it has to give me that high. It doesn't do it. God damn it. Apparently I can't draw, right? So I don't get that. What do I get here? I get a potentially now, I get, well, let's see, what can I use here? Oh, here, let's use this. I get potentially now, I've got a lower high. But I can't qualify that because this could in turn, of course, right? It could just do this, right? And then we're back to this being the low. So it changes the complexion. But because this doesn't give me a new high, but I don't know that until this low breaks. So you have to be mindful of the structure here. So if I bring that over, now we can see the trend change because now I've got a lower low followed by a lower high, right? And I qualify this as a lower high when it gives me a new low, right? So stay with me here. I know this is very rudimentary here. Now, additionally, now just look at that. What does that look like? Well, in classic technical analysis, that sure looks like a head and shoulders, right? Now, for an Elliottian, we have count aside, right? And this some people are counting it this way. If this is an extension in the 1, 2, 3, 4, 5, and we have an ending diagonal here, and we're completing that 5, well, what are we anticipating here? If we think that that's the completion of this trend here, and we're going to do it, right? Again, I think this is perfectly valid here as this ending diag, right? In Elliott speak, we get an ending diag here to finish, right? What proposal is that's the top of the 3. Well, when we're anticipating that would be a good top, how do we know it's a good top? Well, we don't know, right, until you start to see change in the swing structure. So all of a sudden, this becomes a candidate as an A, B, right? How do we know it's a good B? We can't qualify it until we get a new low. So this low leads to a lower high, which leads to a new low. So this now becomes a good high, right? I'll take the Elliott off of it. So, oh shit, I'm gonna have to use a different color here. So let's go here and we'll put that one, we'll call that, we'll put it in blue here. So I've got, this is a high, but it's a lower high, right? So it's significant because it led to a lower low. Now this is where it gets a little trickier here. What do we do down here? Well, this is the last lower high that led to a lower low. So let me finish here just to stay consistent. All right, so here, all right, so this at that moment in time, this was the low. Now, does this low, do we have any potential for a swing change? Well, we wouldn't unless we got a new high here. So if this had gone up here and taken this out, well, oh, hey, now I got a potential trend change, but I don't. What do I get? I get a lower high. So we would just stay here, right? I'm going to just do the lower highs or the weaker highs, right, or the lower highs in blue. So swing, change of character, right? It's often called a Wyckoff or smart money. You get a change of character here. So down we come, retrace. Now this does not give me a new high. So the only thing that we can call it is potentially another lower high. Now come down here. This gets very tight, and you wouldn't know unless you really dug in there. But in actual fact, here if I put it on the low, we do get a new low here, right? So it's very slight. I mean very slight, but we get a new low here. So we have, in turn here, this becomes a low that leads to a lower high, but this becomes the new lowest low, right? So this is a low right here, but we got to change that color as well. Let me put that in, here, we'll put it in that, right? Because it does not, I got a lower low here relative to these two, but I do not get a higher high. In fact, what I get now is a lower low. So this becomes a lower high. This becomes my new lower low. So this, we'll just leave it that way. Now, so we come up here, same thing, right? So we go up. Now, yeah, there's a little microstructure here. I'm not talking about microstructure here. We'll get to that in a minute. Right now, what do I get? I get a swing, right? I get an internal retracement, but I do not get a new low, right? So what happens? Now, the next thing that happens is we go up here, and this is happening. It's the same thing, right? So we get a swing. Now I've got a new high, right? So now I got here. Now I got a lower, I've got a higher low. Now here, higher high, right? So we know I've got a good high here, a good low. Now it happens again, right? Every one of these, I'm getting it right till I get all the way here. I'm just using the zigzag to take out all the microstructure here. Now I get a new high. I've had a low. Now I've broken the previous high. So I've got a good higher high here. So what do I have? I have a change of structure. Right? Now, what I want you to focus on here, this is the last low that gave me a new high. Right? Now I can call it here. Now, if you're over here, you don't know. But at this point in time, given the retrace that I've seen here, I can now call this a good high, and we've had that change of structure because that change of structure happened right here, right? As we took out the old high, the weaker high, right? Or the high that gave me this low. I don't get a new low, I get a new high. Now, I've got a new high, I retrace, right? Again, just think back to what I said. We can only do two things, right? Either we're going here or we're going here. That's it. Right? That's all there is in the markets ever, in every chart you've ever looked at. That's all there is. Swing, retrace. Now, is it going to be a new low? Right? It would have to take out this low. It doesn't, right? Right here, as soon as it takes out this high, now I've got a good higher low. Gives me a new high. So this is the last low that gave me a new high. Retrace, right? Now, how do I know if that's going to be a higher low? I don't until I get a higher high. Right? It seems very simplistic. Like, really? Okay, do we have to go over this? Well, I think you'll find that not only can it help you just in terms of identifying where the trend is, but you'll find that this will also be very helpful in analyzing the Elliott structure. So as we look at this, right, just as we look back here and said, hey, that looks like a 1, 2, 3, 4, 5, A, B, C. Well, it gets a little tricky in here, right? Now you got to get a little bit more creative and have a little bit more knowledge with Elliott to deal with this and know how to solve this. Now, there's sadly with Bitcoin here, there's multiple ways you can solve this, right? Which is not uncommon with Elliott, that there would be multiple ways that you can solve it, and we won't have a definitive answer until we have enough context beyond that structure to where we can come back here and definitively say, okay, we can be clear about what this was. We can be clear about what this was. But as we sit here over on the hard right edge, and again, I'm over here in a daily, I'm out of log. What can I see? Well, the last low that gave me a new high is actually right here. All right, so let's just draw this over. Now, when that broke here, we have a trend change, right? So we're going just fine here. We'll get higher low, higher high, higher low, higher high, higher low, higher high, higher low. Something changes here, right? We take out that low. Now, this does not give me a new low here, but that's not relevant. What's relevant here, because it's already, I know this is a good high, we have the change of character here. It's given me a low, but this is an important low because it's a function of what it's relative to. So even though it's not giving me a new low here, that doesn't matter because I've had the trend change here. Down I come. Now, this becomes a low that I want to pay attention to, right? Right now, we don't know until we see what happens here. Now, this could have, right? We could have gone from here, and I could have gone out and taken that out, and then this would be the dominant low, right? I don't get that. What do I get? I get a lower high. How do I know it's a lower high? How do I know that that's a high that's important, or that it's not going to be just a temporary or a weak high? Well, I don't know until I break this pivot and I get a new low. So then this becomes a higher. This becomes the new low, this becomes the new lower high. I got to keep that in blue. This becomes the new lower high. All right? Because this low didn't do its job. Right? Think of it that way. Its job is to give me a new high. Doesn't give it to me. What happens here? Right? I can't qualify this until I see what happens down here. Now I get a new low. So I've got swing from higher highs, higher lows, all of a sudden, lower low, lower high. Now, how do I know it's a lower high that's significant? I don't until I get right here, and I get a new low here. Oh, come here. All right, now that I know that one is good, right? Because this low, or this high, gave me a lower low. Now, where are we here? Let's wick it off. So this is the last low we have right here. This low, has it given me a new high yet? Nope. So I can look at it and say, well, the last swing structure that I got from this low did not, what's its job? Its job is to give me a new high, which is right here, right? So it doesn't do it. So I'm now just stuck in this range between a good low here and a low here, but this would be a weak low, or a weak high. So let's do it that way, right? So from here, I can't say lower low, lower high, lower low, lower high. I can't call this within that context, in that swing structure, because it doesn't give me a new low. So let's do this one here, same idea. So we'll put that one in this magenta here. So I'm stuck, right? So I have a good low, I have a good high, but I'm in between right here. So these two, so really, this is the last, this is, oh really, pardon me, I should put it right here. Because this is the last high that gave me a new low. So here's where I'm stuck. Here's where we're just stuck in structure here. I'm in between, here, let me take this off so as not to confuse. Here's the last high that gave me a low. All right, so this could actually be, let's put that green. All right, so here's a high, gave me a low. Now I'm stuck. I mean, temporarily, right? Sooner or later, one side's going to break, right? Remember, right, as I said, only two things can happen. Either that side breaks or that's it. That's all the market is ever going to do. Well, I mean, as soon as I say that, you have variation, right, if we get a triangle, right? But really, if you're in a triangle, really all that's happening is you're stuck between that high and this high, and this is all just internal structure. It's relatively meaningless until one of those sides breaks, right? So we think about the potential for Bitcoin to be in that triangle, right? The implication based on the context is that if it's going to be a triangle and we break out of here, we're looking for the trend to continue, which means that really all we're doing here is just doing swing, retrace, swing. That's it, right? It's all the market can ever do and will ever do. Right? It's just the nature. It seems so rudimentary here, but I feel like I need to clarify that. So I'm stuck here a little bit in this, right? Now, could this become a more significant low? Well, it could if it gives me a new, a more significant swing high if it gives me a new low. Now, you see, then you think, well, where's the high? Isn't it this one? Because that's the swings that started it. Nope, because this low didn't give me a new high. So really, I don't break out of this until I break this low or this low. I got to break one of them. In this case, I got to break this one before I get a new low, because this is the last significant low that gave me that high. Right, but it didn't give me, as we were just saying before, it didn't give me a new high. So I have a tentative high here. Right? It's not a new high until it breaks that, right? Then I get a new high. So now I'm just stuck between a weak high and a weak low, right? Here's the dominant range that I'm in. Here we stay stuck, right? So it kind of fits with what we're doing. Now, it kind of clarifies, you know, if we come back to the Elliott count as into, oh, where are we in this count? Well, we're stuck, right? We're just going sideways. Hopefully that didn't confuse you. I mean, you can put a zigzag indicator on here. I mean, there's a gazillion of them in TradingView here. I just picked one that was just easy to spot. Now, of course, this changes from time frame to time frame. So right here, I'm doing this out on the daily just to emphasize that this is the range that we are stuck in. Right? Until we get out of this range here, it's a guess fest. Everybody's guessing as to where we're likely to go next, right? We can't be definitive about it until one of these two, it's here, right? One of these sides has to break because this is just internal structure. It's not really giving us any clues as to where we're headed next. So you would look at this and think, well, okay, if it's going to break, what you'd anticipate would be a pushback to retest that low. Right now it's starting to look more ominous here. I'm heading down below 20K, right? We're going to do something like that. Well, we don't know. We certainly could. Now, if it goes up, if we break higher, oh God, damn it, TradingView, that's most annoying. Here's the last low. I need a low that gives me a high. Now, if I get it here, if I get it off of this low, is that the low that matters? No, because that's the last low that would give me a new high. So this just becomes internal structure, which can have value, right? We can take this down to the 1 minute and do the exact same thing and look for that structure. Where's the break? Where's the break of structure as we had here, as we had here, as we had here? Where is that break of structure? Well, right now we're just going sideways, right? So no one really has an advantage here, because we're stuck between these two. Now, you could look at it and say, well, okay, bigger picture. Here's the last low. Well, you could do it. You can think of it this way. Well, here's the high. Here's the last low, right? We've been in that range. And all of this internal structure is just trying to break out of that. Because, again, now if I just go back to where we started, okay, here's the swing that gave us our all-time high. All of this is just, we're still just dealing within that range until one side breaks to give us a new high or this breaks, right? We're just stuck in this range. Now, so how does that help you? Well, let's go from the daily, let's go to the hourly and see what this looks like. Oh, here, we'll take this off here. All right, can we do the same thing down here at this kind of swing structure? Well, yeah, of course we can. So, oh, shit, let's see if I can. Well, we'll just do it this way here. So here's a high that leads to a low, right? How do I know that's a good low here? And we can put that in red here. Now, as I'm doing this, historically, I know it's a good low because it gave me a new high, right? So all of these little swings here. So here's the next high that I got. Oh, shit, come here. So here's the next high, right? So this low gave me a new high, did its job. This did not. So here's the last dominant low right here. Gave me this high, which broke the prior structure, which gave me this low, which gave me a good high. Now I get a new high here, right? So I technically I have a new high here, and I have no, I don't have a low here because I don't. Well, you'd have to use this because this gave you a high. We don't have any structure, so this is here. It would actually be a little bit off from what the zigzag is doing because the zigzag is based on percentage of the drop here. So this is the last low that gave me a high here. If we're going to use it, it almost doesn't matter here. We could use it here, right? Let's just let's not complicate it. Okay, so let's use that so I don't get you confused. Okay, so let's just look right here. Right, so what happens here? So I've been in this series here from this last low, gave me a higher high, gave me a low, gave me a new high. Now, break of structure here because this low breaks here, so that pattern of higher highs, higher lows breaks. Now I get a break here. Now what do I get here? Right, I know this seems so simple. I get a potential lower high here. So I can put that in, oh shit, what we're using? Blue here. All right, so I've got a potential lower high here. I can't qualify it until I get a lower low, right? So when it breaks here, right, I've got a structure break, but now this high has given me a new low. Well, right now that low is right over here, right? I can't qualify. I don't know when that's going to end. I don't know when that's going to end until I get some sort of swing structure to come out of that, right? So if we come back this way, well, then I potentially have another lower high, but I can't qualify it until I get a lower low, right? So it's relatively simple, but it's a way to organize in your own mind. Wait a second, where am I in this count? And so if you were thinking, now strap your Elliott hat on. If you're thinking, oh, 1, 2, 3, 4 here, I'll just keep it simple. Oh, there's my 3, 4, 5. 1, 2. Shit, how are we going to do that? How did we do that? Oh, shit, I can't remember. I think we went W, X, Y. So here, let's take this up. All right, so if this is the 1, this is the 2, right? Now, think, what are you looking for in the 3, right? Well, certainly you're looking for a break of that structure of the 1, and now we can measure and we use our fib swing analysis, and you start to put all of this in the context of an Elliott count. Oh, okay, well, here we did the 1, 2, 7, 1, 3, 8, right? Second most common, but something happened here when we broke structure. So all of a sudden, that starts to look like, wait a minute, that looks maybe like an A, a B, and that could be my C going in here if I push this off. Right, so all of that kind of fits in together with swing structure and the Elliott count. Now, what else could we put on top of that, right? Now, so where would the algos fit in? Well, it looks like we're about to. Well, here, let's go to the algo is not going to use the Elliott count. Right, so where are we coming from this pivot to? So this is the last low that gave me that high. Here, I guess we got to deal with this one as well. But in terms of the swing structure, the dominant swing structure, here's the last dominant low that gave me that high. So as I'm retracing, where do I sit right now? Now you can start to look at that and say, well, okay, well that seems to make sense right there, right? We're going to get into, oh shit, get out of there. We're going to get into this price action structure. Now nothing says that has to hold. Oh, did we just break? I think we just did, right? So that just got stopped out, right? So we've just broken that. So we've just did we? It looks like we did, right? We've just invalidated. Yeah, we did, right? So we've invalidated the idea that this might be a an impulse, right? So we went 1, 2, 1, 2, 3, 4, 5. So this was 1, 2, 3, and we were doing a 4 here. So no longer is that on the table, which is okay, right? So you take a small loser there if you were in that trade. But if anything, right, it's giving us more clarity. Okay, if it's not going to be an impulse, right, one potential roadmap is off the table. Okay, so what are the alternates? Well, again, we're going to have to wait until we get some new information. Right now, I don't have a low here. I've got a swing that broke structure. I've got a higher low, or pardon me, I've got a lower high that gave me a candidate for a B. Look like I can squeeze an impulse in there because I can't go 1, 2, 3, 4, 5, right? Because 3 would be the shortest. Well, we'll have to see how far that's going to go. I don't even want to try and label it, right? Because this actually looks like WXY, right? So, we'll see how far that goes here down on the 60-minute. But we've eliminated the impulse, right? So we know that's off the table. And once again, until we get out of this range here, I think you don't need to guesstimate as to where it's going. What can I see here? Now we're dealing with just price structure here. I'm just dealing with this pivot, this golden zone. If that breaks, what's the next thing we do? Right. Now note how when I go swing loaded dominant to dominant, right? So remember, right? It's all we're doing with the algo, right? We get a swing. Now we're retracing, right? This is going to hold. If not, right, the next target would be down here. If we get our pivot in this zone, we are anticipating that we're going to go up and finish that pattern, right? All the market can ever do, right? So it would be swing, give me a higher low, which leads to a higher high. So hopefully that just gives you some new ways to look at swing structure here, or if that's review, well, okay, you probably checked out a long time ago. Otherwise, it's just a good way to get your eye tuned in, right? So the zigzag sometimes can be a pain in the ass, but it'll help you say, okay, wait a minute. I got look at the trend change here. Here's my new low here. Now I've got, this is the last low, gave me a high. This gave me a new low. This is the last low that gave me that high. Now this same thing right here. This thing fails to do its job, doesn't give me a new high, right? So I get a low, then I get a lower high, which gives me a lower low, lower high, lower low, lower right. So the trend is down all the way. And note here, we don't get a higher low, even here. Nothing gives me a higher low until this wick right here. That's the first time where I have the potential for the trend change because it breaks this high. Breaks it. So this becomes the last low that gave me this high. Well, at that time, it gave you this high, right? Well, now you get a little retrace. Well, this would be the lowest low. Now that's the last low that gave me that high. Oh, wait, you could break the microstructure down and you could ultimately get to where this is, well, shit, you could get to where this is the last low that gave you the last high. I'm on the 1 hour. You take it down to the 1 minute, you're going to get all that little microstructure. I don't know that you need to do that unless you're scalping, right? But you certainly could and would have just as much value there as it does on the daily. So if this is swing structure here, I get a low, right, that takes out the last low that gave me the new high. Now I've got a potential change of character here, but I don't, does this low here, oh, here, let's do it this way. All right, so this is the swing that fails to do its job. It does not get me a new high, right? So I get a new low. It breaks here, I get a new low. Now, what happens here? Well, now I get a little funky here. So I've got a new low here, but then I get a new high. So really, now you're kind of stuck in this box. And you don't get resolution here until you get this low because it breaks this. Yeah, this is probably confusing. Right, so now we break here. So this is the last high. So do you see the new range here? So this is the high. Right now, all of these lows failed to give me a new high. All right, so this is the last low before I get a new high. Right, so that becomes so it would have been here. Well, shit, it would have been here, then here, then here. Ultimately, you get it here before you get any sort of a retrace here. In actual fact, here in terms of the lows, it would have been here, but that doesn't fit the Elliott count the same way, right? So I'm a little bit influenced here by the potential for this to be A, B, C, X, A, B, C. Hopefully, you get my point here, but just it'll help you qualify the trend. Where's the, right? It's so easy to say, oh, just, get in line with the trend. Okay, well, where's the trend? And on what time frame? Are we talking about the daily trend? Are we talking about the 5-minute trend? That's why often, members will recognize this. Often I get requests for, I'm going to take a look at XYZ or, this asset or this crypto pair, or can I look at the SPY? Or first question out of my mouth is always, what time frame? Because what we're looking at on the 5-minute could be very different than what we're looking at on the 60-minute or the 4-hour or the daily. Good way to identify the trend. So right now, trend is, as we sit here on the 1 hour, well, here's the last high that gave me a new low. I don't have a new low yet, and I can't qualify that low until I get some sort of a pivot here, because if it's going to be a low that's significant, it's going to have to give me a new high, right? It would have to at least take out that one. So then I'd get a potentially new high. Now, if it retraces here, I have the potential now for the trend change, because now I've had this break in structure. So the retrace here, the anticipation is the new trend continues. That gives me a high followed by a higher low that gives me a higher high. Right now, if that's going to play, if this were to have gone Elliott ball, right, this would have been 1, 2, 3, 4 here. Now it DQs. Now we're looking for, the higher high. All right, hopefully that helps you a little bit. I just give you some definitive ways to define swing structure and trend structure, and the trend and the time frame that you're looking at, and where is that trend. Okay, hopefully that helps, gives you a few things. With that, I will sign off here, and hopefully we'll have a little more clarity when we come back to visit this again next Friday. Just a reminder here, we've got live streams going Monday, Tuesday, and Wednesday on this YouTube channel. Monday and Tuesday, it is myself doing it, and we open it up to all asset classes, for those of you that aren't aware of that. Wednesdays, my partner, Monte Crypto, brings his very unique approach to support and resistance and price action. Very popular amongst the members. That's on Wednesdays, and then every Friday we do a Bitcoin update. Before I leave here, I thought I would just show you this here, just to kind of keep track of how significant this algo is. I've shown this before, right? So we looked here when the S&P was starting the correction. Well, just look at the swing structure here, right? So we're going higher highs, higher lows, higher lows. All of a sudden, this swing, when the potential for this to be swing to a higher low doesn't give me a higher high, right? So it rolls over. A, B, C, right? Now, all of a sudden, the internal structure, I'm getting swing, retrace. Now I'm getting a higher high. Now I'm getting a higher low. Now I'm getting a higher high. Now we run into essentially a triple top right there. Now I know, right? You look at it, and I showed this recently. You look at it and you think, it's just a prior support becoming the resistance here. I get it. It's just price action here. Nope. That's why I can't get through, right? You got a sell side algo there. And another thing you'll hear me say often is, it doesn't matter, right? If they get stopped out, they don't care, because eventually they'll get into a series that would look exactly like this. Get to the highest pivot right there. So you see this one that's a little far for a front run. It has yet to hit that. So what happens? It retraces right back to the same golden zone. Golden zone, golden zone. Now, now certainly, right, we could do this. Right now, I've got a new low. I've had a retrace here, just as I did here. Now I've got a lower high. Now, we don't know if that's going to be the pivot, just as we didn't know here until we got a new low. Here, do we get a new low? If we get a new low, then you'd anticipate that both of these targets are going to get hit. Now, is that going to be the 4, or is this going to be the Y? You have to relabel, right? It's not going to finish like that unless you're doing it this way. Putting the B here, I'm not sure it looks like a 3. So we'll see, right? So the Elliott structure, if it's there and it's helpful, great. If it's not helpful, you don't need it. You could just work with swing structure, this algo, and of course, there'd probably be some median lines here, although I think here in this case we aren't there yet. It's corrective, so I'd go with a shift. lower range here. So this, as we stay in this range here, you can see here the potential path for that to come down. Get that target here would put us down on the lower parallel here of that shift. Let's get that right there. Get that shift parallel right down here would make a whole lot of sense if this swing structure is going to stay intact, right? So so you look at it and you go, oh, well, the potential here for the swing to where we got a lower low and then a lower high. Well, now if you can spot the golden zone there, it makes it all the more, you can take it all the more easily, right? So because you've got such a low risk reward there. So that was, perfect one, right? So you can be in the golden zone, stop. Oh, you'd probably give it a few ticks, right? So that is the second one there. So that's a 9.5 to 1 off of that trade, right? If you're not in it, you're late. Now, it's hard to take things overnight. I understand that, right? So you'd likely want to do that with options and something that was hedged given the background, the macro geopolitical news and all the craziness that's going on in the world. So just holding a futures position over the weekend, I'm going to guess most will not do that or would not be comfortable without hedging it. Even if you were short, right? You still want to hedge it because all it would take, you just imagine they come to some sort of ceasefire and market's going to explode. I'm not forecasting that. I don't think that's coming, but I wish it was. All right, so if you're short here off of that golden zone here, now this is a daily chart, you're in good position here. Lower low, lower high, lower low. All right, it doesn't take out this high. All right, so right now the trend remains down. Okay, guys, there you go. Lots to chew on. Hope that helps, and we'll be back. I'll be back on Monday. Talk to you then. Have a good weekend.